Warriors. I'm Dale Pinkert. Welcome to FACE. Let's have a great day. I'm going to start off by reminding everyone you only have a couple of hours left to beat Nostradamus and vote in our contest for some outstanding prizes. So get your vote in. Maybe Steve will post the link in here so you could go ahead and do it during our webinar, because you only have 2 hours left. I'd like to know who's Nostra whatever. Looking forward to the outcome of this election. Maybe you need to take into consideration Euro's one of the pairs you're going to be predicting. Here's the look. Yesterday I thought this was a bear flag and said obviously that would change over 24. Well, it wasn't a bear flag, but we haven't gotten through 24 yet. Should we get through 24, I think we have new highs coming. Because on a longer time frame, looks like a continuation formation. Outside chance, but looking less likely of one more shot down. So I'm thinking, since I'm still looking for one more high in the S&Ps, even though that's looking less likely, we need the Kudlow pop to happen here pretty soon. But should the euro break out, we have new highs coming. A lot of Elliottians looking for 26 or better. On Euro USD, I want to tip my hat to Blake on cable yesterday. He showed the triangle that we were right on the verge of the breakout. That was right here. And then we have this big candle. Okay, so we've made a divergent high up here, perhaps up at new highs. There might be some type of short scalp, but we are beginning to diverge. This is confirmed. This is not confirmed. And this next high in the pound may not be confirmed for potential double divergence. Everyone with me? Also, the oil is really, someone's really supporting it at this 60-20 level. We take it out, actually the formation measures, it's about a $4 formation, so under 60-20 would give you 56. So crude trying to hold. We start getting back through 180, we're going to challenge at least this high. So this too important for the S&Ps. A lot of oil weighted, a lot of stocks, oil shares, not a heavy weighting anymore after what's happened to crude, but higher crude prices and oil shares would help the cause for another move up. In that particular index, Dixie, it looks kind of like make it break it here. Looks a lot like the yen, only maybe even a little weaker. We'll see if we could get one more shot up. Otherwise, we're headed down towards this low where we can end up with a third drive down here at 88. So back over 90, you would get a continuation of the correction, maybe back to 91.5. That's looking less likely. Dollar's looking pretty negative to me, and that should support gold and silver. Both had decent days yesterday after we talked about it. Again, gold unchanged here, trying to be contained, but to me it looks like we're going to get some type of upside breakout. I thought we'd get one more shot down if the dollar rallied, but back over 1340, looks like new highs are coming up around 1380 or so, maybe even 1400, and that would definitely correlate with the dollar breaking down to that bottom one more time. So those are things that I'm seeing this morning. Do want to make everyone aware that you really need to become a member of our society here. So you have access to our traffic light page. You have access to all the research, and you have access to all the patterns in play. Looks like we have a couple going. Stelios is pound kiwi still there, and Blake is bullish. He called that pound yesterday. Knowing Blake, he goes to the door. He trades it on the way up. You could have a 300 pip move, and he could be in the trade 10 times. Also, don't forget to, again, to vote, and becoming a member is going to give you a real edge, because an hour of analysis is really not enough. If you want to trade in a community, you have to end up hanging out here with Amanda and the team, Okay, guys, you're going on Jumbotron here. Okay. Oh, I have to log in. Okay. So we'll skip that. So we have a great guest today, Peter Bookvar, CNBC contributor. Great guest. Peter's been kind of negative, looking for a recession. I think he's pushing it out to 2019. Looking forward to speaking to Peter and seeing what's on his radar now. Last time we spoke, it was really a one-way market in S&Ps. So stick around for Peter Bookvar. I'm positive, like usual, you're going to get some insights on the trading landscape. Looking forward to that discussion with Peter. And I'm going to turn it over to Blake now and see what he's thinking. Blake and Steve always crystallize and take me out of my trading fog just by listening to them for about 20-30 minutes. So, Blake, what's on the agenda in the markets for you today, buddy?
Hey, how's it going, Dale?
Good, bro.
Hold on one second. Just doing a little tweaking here. I shorted just a little dollar Canadian at 50, and I'm just gonna cover it really fast, just ahead of the producer prices in retail sales today. Just I'm kind of fighting a trend. I actually got run over like a freight train yesterday with the dollar CAD. Here, I'll show you guys what happened. So you guys think that trading is all roses and sunshine and rainbows and all sorts of things, and
yeah, tell them how it really is, Blake.
We make money every single day.
Run away from anyone who says that.
Right. I was so well positioned in the dollar Canadian too. What really stunk yesterday is that I had a really well, let's talk about everything that I did yesterday, and then talk about like what's going on now. So ahead of Polis's comments right here, okay, I was short the dollar CAD, and I shorted at a decent price. I got short at like 128, 60, whatever, because I was shorting at this previous support, whatever, and I was trading it on the short side, and I'm like, okay, well, we're eventually going to break through here. I'm playing the tariff play. To me it was worth the risk. I put my stops kind of wide. I had them up here, and Polis's comments came out and basically said, hey, we can, he just referenced, he came out really dovish, and he talked about rates, and about that needs strong growth in order to continue to raise rates, and he's a little dovish about or a little bit more dovish on his outlook and about NAFTA and anything. Anyway, there's the rate comment that really got the dollar CAD, and the dollar CAD ripped up. And not only was I short the U.S. dollar Canadian, I was short the Euro Canadian as well. And the Euro Canadian I keep really wide stops. So I got caught short here. Then I actually got stopped out of my original position, shorted more, and then I got a decent sized position right near the highs because I knew we were by 130, but I already got ran over first and foremost. And then I ended up getting out on this like spike down and recovering some of my losses, but overall it was a pretty tough trade. It hurt. What hurt more though, believe it or not, was this Euro Canadian that I was short, because I shorted it here at the 618, and then I was short pretty aggressively. And when we came over these highs right here, this is where my stop was. I got stopped out. And then I, reshorted it and made a little bit back, but not much. And I was left with a pretty negative day. Now, fortunately, I did make some good money getting long the cable. So I did get long the pound. And you're right. I put in a pattern in play yesterday the pound New Zealand or pound dollar right here. I put in a pattern in play, and when I get long, or put in like a long or a short or whatever it is, I will be in and out of that trade probably multiple times while that pattern in play is going, because I use that more for direction. I mean, that the pattern in play, you have to realize is an educational setup, because when I tell you, hey, there's a we're breaking out of the triangle now. My justification for being long, it should make sense to you once I explain it here, but it had a previous triangle that was moving, that was breaking lower. The market got short, but then found support and we reversed the other direction. So I already know that the market is probably a little short the cable, and now it's moving the other direction. All right, and to me, the ability for the pound. As a matter of fact, what I'm going to do right now is I'm taking profits in my cable, because I bought it at 50 overnight. Now I'll explain that here in a second. For those of you guys that are long pound with me overnight that were in the chat room, I told everybody last night I'm buying it at 50 overnight. I just bought it at 50, but I'll pay above 140 for it now, because it looks still bullish. But anyway, we were dropping through here, and we reversed, so that caught the market short, which I now believe that we're going to 142. Now the big issue that I see at this moment, for you harmonic people, would be this, right? This is a Gartley, roughly. Okay, do you guys see that? That's a Gartley, and that's an ABCD. So because of that, I'd like to see a move above 140. We get above 140, and then we're talking. But like I said, I personally, I made some good money in the cable, but I did not recover all of my losses from the Canadian pairs. Those hit me pretty good. So, but I think if the pound breaks above 140, we're gonna do this. We're gonna do some sort of butterfly. So that's what I'm thinking is gonna happen, and I believe it's still gonna happen because of this triangle break. But I'll trade it. Like I said, I'll like you said, Dale, I'll trade it several times as it's making its move higher.
You're a trader, Blake.
I am. I'm not a Forex investor. I'm a trader. So, and I'm a lot more active. And I've explained this to you guys in the past, and I'll explain to you guys again. I'm a lot more active than I used to be, because I'm trading much bigger positions. So when I'm trading, 10 times my previous size or 20 times my previous size, or sometimes even more than that, I tend to be a little bit more, trigger happy as far as, taking profits off the table, and also taking losses rather quickly. I don't like to stick around, and if I'm in a loss, I'll sever it quickly instead of trying to let it work for me, because as a trader, and because I'm in front of the computer so much, and I have a lot more awareness now than I did in my previous job, because when I worked at WiseTrade as their chief currency strategist, I would sometimes be on these webinars for like 4 hours at a time. It's hard to be on, and you can attest to this, Dale, it's hard to be on a webinar talking, discussing the markets, and then the market starts moving, and trying to trade and then talk and then answer questions, and trying to explain a concept when everything's happening. It's not easy. So I would take positions, and I would sit in the market for you know, a day or 2 days. I would, you know, I sometimes a week I could sit in a position, but because I'm not on the webinar as much, and you know, I'm only here with you guys for about 30 minutes in the morning every day. I can say my piece and then get on with my day and get on with my trading. And so what that means is, if I take a loss, if I go, okay, well, you know, I got long the pound, it went down, and I'll just take a 20 pip loss. I can always get back in because I'm sitting in front of the computer. I'm ready to execute a trade immediately. But when, you know, I would spend 4, sometimes more hours every single day doing these webinars, I didn't have that luxury. So now that I do, I really try to take advantage of that. I hope that makes sense. Anyway, so yesterday I got run over by the Canadian. Fortunately, I made some money in the cable. You know, again, if the pound breaks above 140, hopefully it does it after PPI and retail sales, not before, then I'll look to get long in the pound again. One of the things that I have to point out here, let's talk about a couple of things going into. Hold on, really fast. Hold on. Hold on, really quick. Let me. Okay. Sorry, just making some adjustments really fast. Okay, so going into today's data, you know, yesterday's data, it was moved by the Bank of, it was moved by Polas. It wasn't, well, at least the Canadian was. The rest of the market was really quiet, and frankly, we've been, you know, fairly quiet markets, especially in Europe, for the last, you know, several days. But yesterday, the market didn't have much of a reaction initially to the CPI data that came in line, but then the dollar started to weaken, and we saw the euro, you know, break higher. Now, the euro dollar is near what I would consider is channel resistance, loose channel resistance. But if we can break above, you know, 124.25, 124.30, that's going to be pretty negative the dollar. I think that might allow for the dollar or the euro dollar to make a move higher towards 126, which is ultimately a multi-year trend line. And this is where, you know, things get a little dicey for the dollar if the euro starts breaking above 126. All right, and I don't know if that's going to necessarily happen, you know, today. But I think the risks are now starting to increase. You look at, you know, the pound. The pound looks like, you know, we could very easily. Here, let's get rid of that. Okay, the pound looks like it could very easily get up to 142, 143 again. Look at the Aussie. The Aussie. Oh, we did break through resistance. So if you were using ForexAnalytix this morning, the Aussie dollar is nudged up against some key resistance, and stops are likely building above the 79-cent level, so a break higher could trip stops and allow for some buying to the 79.90 level. That was an hour ago, and the Aussie is tripping stops now. And you know what can happen is we can, you know, if especially if the dollar continues to weaken, you know, we can move up towards 79 cents. So the Aussie's staging a nice move. The Kiwi has been stubbornly strong, and we've got this nice range that's been developed. The dollar Canadian. Now the dollar Canadian, I'll tell you, I'm not short the dollar Canadian, but when we listened to Polas's comments yesterday, they were dovish, but not that dovish. What I think happened yesterday, and this is you know, just kind of my summation of the situation, is there was a lot of people like me, even though I was positioned poorly. I'll be the first to admit I was positioned poorly short the US dollar Canadian. I was positioned poorly being short right here. Okay, right there. But I think a lot of people established short positions last week on the failure at 130. And so that this move right here wasn't so much because of the comments of polls. It was, well, it was, but that's what made the move happen. But it was because of really poor positioning in the market. And I think that's what took us so much higher. I mean, we were listening to his comments and we're watching the move, and it was going up in my face. And I was talking with the guys in the office, and they're like, man, this just doesn't, what he said doesn't justify the move that we saw yesterday. We didn't think as a group, but my 2 cents is that it was just really positioning was so poor that, you know, so many people got short the dollar Canadian and squeezed everybody, myself included. Okay, and I was poorly positioned because I was short here. So, you know, how aggressive was the market here on the failure at 130? You know, you got a false breakout, it's 130, it's key resistance, it's a big fig, so, you know, the market probably got fairly aggressively short. So that was positioning. I still think the dollar Canadian is going to come down, and I have no qualms at this point stepping back in short, even though I'm not going to do it ahead of the numbers, but stepping in short knowing that the risk is above 130. It's still a good risk reward short from up here. Okay, I'm just not short currently. I'm not as trigger happy as I was yesterday. I'm I'm definitely a little bit more nervous. Swissy's not doing a whole lot. The US dollar Norwegian krona is trying to break lower out of a, you know, loose triangle, but it's weak. The one thing that we have to note about the US dollar Norwegian krona is it is a weak pair, and this is one of those that is going to play really well in a dollar weakness. If the euro dollar breaks through 126, eventually this US dollar Norwegian krona is going a lot lower. And I'm sure Stelios, who is a Norwegian crown bull, would probably be ecstatic to hear what I'm saying here technically about the US dollar Norwegian krona. But
and also remember that we have the Norges Bank tomorrow interest rate decision.
Oh, that I wasn't aware of. And hey, good morning, Stelios. How are you?
Good morning. I'm very well, thank you, man.
Are you still bullish on the crown?
I am. It's a very difficult pair, you know, euro Norway and dollar Norway. It tends to fluctuate a lot. But I am still long-term bullish on the krona, no doubt about it. Yes.
So are we expecting anything out of Norway's central bank tomorrow?
We are not. The last time they spoke, they were talking about a potential rate hike in autumn. That might be brought forward a little bit because we had the big beat in inflation last. Was it this week or last week? I can't remember. Instead of
I think it was last week.
Yeah, 1.8 expected year on year came in at 2.2. So that was a big beat. So no doubt this is going to cause them some concern. But yeah, we're not expecting anything for tomorrow. But there's always a chance they might change a little bit their wording.
So this is one of those situations that I think that if the euro dollar ends up being really bullish and breaking above 126, then the US dollar Norwegian krona is probably going to really roll over hard at some point. And I haven't traded it in a while. Sometimes I'm really active, the US dollar Norwegian krona, and I haven't been really active since December of this last year. So I have it definitely on my radar. Thanks for the comments, Stelios, appreciate it. Yeah, and the U.S. dollar Mexican peso, another currency pair that's really on my radar here is that we're near the 200-day moving average. Now, for those people that know me and they know how I feel about head and shoulder patterns, and especially how I feel about head and shoulder patterns that don't have room for completion. What I mean by that is they're typically not continuation patterns, meaning that if this thing breaks lower, what happens is, you know, the target, if this is a real head and shoulder pattern, the target is way down here at 1667. But do you see how there's no right or left arm? Do you see that? There's no left arm. So because we've never been down here, or we have, but it's been way over here. Because of that, there's no where for us to go. I have a hard time trading this on the short side per se as a head and shoulder pattern, but regardless, if we break through this 200-day moving average, which has held the US dollar Mexican peso, I think the risk is lower. Whether we could get a full completion of this, I don't know. But again, like Canada, with Mexico, the situation with the US not imposing tariffs on Canada and Mexico, making them exempt, you know, in the near term, as long as they continue to play ball with NAFTA and renegotiate, I think is very bullish the peso and the Canadian dollar. One of the things that is always a risk when you're trading the US dollar Mexican peso, and the Canadian for that matter, is risk appetite. If stocks continue to rally, if stocks continue to move higher, it makes it very difficult for, excuse me, if stocks reverse and they start to go down, it makes it very difficult for the emerging market currencies and commodity currencies to strengthen. And so if you look at the S&P and you go, okay, well, you know, the S&P may have reversed here the last 2 days. If the stock market continues to come down, that's not typically going to be a very good situation for those emerging market currencies, and commodity currencies tend to move lower because of that. So that's one thing that I do have a concern with. And with that being said, I'm gonna pass it over to Steve and Dale. Good morning, guys.
Hey Blake. Good morning.
Hey, how you doing, Steve?
A little bit saddened because Stephen Hawking died. I don't know if you saw.
Yeah, I did. And, you know, my wife, she pointed this out last night when she told me. She's like, so Billy Graham died, big evangelical, figure, died the week before. And then, you know, Stephen Hawking, well-known, probably the biggest atheist in the world, passed, and scientist, physicist, right?
Yep.
Yeah, physicist, cosmologist, yeah.
Yeah, and he passed away last night. So two of the most opposite end of the spectrum, from a religious standpoint, passed away within the same week. Isn't that odd? It's kind of odd, huh?
Yeah, you know, Steve, though, that he had his life extended over 5 decades longer than most with his.
Yes.
disease.
Yes, I mean, exactly.
He had a very long candle for what he had to go through. He had a very long life. Most over past 25, 30 years old.
Hey, what's the name of that movie that was about him?
I think it was The Theory of Everything, right?
Yeah. For those of you guys that haven't seen that movie, it's probably one of my top 10 all-time favorite movies. It's so great.
I know Stelios cried when he saw it.
I'm a softie, you know me. I cried.
Yeah.
Well, maybe, I can't say it was in my top 10. Probably like, but a really good movie. So regardless. Anyway, hey guys, I gotta go. I gotta trade this data. So good luck, guys.
So
good hunting, buddy. Hi, Steve. Hi, Sal. How you guys doing today?
By the way, we know that Blake's top 10 movies is something like Dirty Dancing and stuff like that.
That is Dirty Dancing, totally, and pretty.
Barbie the movie.
One last thing, and then I got to go. Dale, you said we only have a couple hours for the contest. There's actually like 15 hours left, so Steve will show it. So, all right, got to go. Bye-bye.
All right, man. Steve misinformed me.
No, I didn't. I never said a couple of hours.
Oh, okay.
There's a countdown.
I misunderstood. Okay.
There's a countdown timer on the voting page.
Yeah, you can see it here. There it goes. 15 hours, 30 minutes left.
Wow.
Okay, so let's see what we get. We have less than 30 seconds for retail data. Here we have the USD yen, obviously one of the most sensitive to respond to such data. Here's Euro yen, the cable on the top right. Let's first see what the market gives us having to do with retail sales, and then we can go over the rest.
There it is.
Taylor, let us know.
Yeah.
Should be
looks weak. PPI
Looks
came in
weak
0.1 higher than expected, but retail sales a little bit lower. Yeah.
PPA 0.2 versus 0.3 expected. Retail sales minus 0.1 month on month versus 0.3 expected. Yeah, so retail sales were quite disappointing. And we are Amazon is, Amazon is definitely undeniably a great company, but in all honesty, this is a chart that has gone completely parabolic, right?
Yeah, Facebook has already broken its uptrend.
You can see here. You can see here Amazon.
Yeah.
You can see here Amazon at the end of the financial crisis. It was like at $30-40, and we're currently at 1.6. As you see, the last move higher, we had a potential head and shoulders formation here before earnings, and instead of actually triggering, we got like that gap higher, which never got filled, and since that gap, we had even more parabolic price action to the upside.
That Mount Everest.
Yeah, but in all honesty, this looks to me like an ascending wedge, right? I mean, it's a very clean ascending wedge, and given the unsustainable nature of this ascent, also as we see, we have very clear RSI divergence. I mean, just consider that the previous peak of RSI was almost $200 lower, and we still have quite clear divergence. Yesterday we had a very nice bearish engulfing.
On the last break that we had in February, we've way surpassed the highs in the most FANG stocks. I actually think there's a chance that, if the S&Ps roll over for a C, that the leaders to the downside this time
might be the FANGs. Yeah, that's true. That's true.
To take out of them.
Anyhow, bottom line, this has been an amazing ride to the upside for whoever was taking it, but I would be very, very, very careful up here, right? Very careful.
Who could hold
because
on?
As we were saying, yeah, you're absolutely right. The vast majority of traders, investors can't. That's a fact. So regardless, I would be quite careful up here. This rate of appreciation is definitely unsustainable, and this technical structure is also kind of a warning. In my opinion, a break below 1,525, call it roughly, is going to warn that something, something bigger is brewing, like at least a larger correction than any of the recent ones is going to be unfolding. Okay. Now, having to do with FX, by the way, we don't see much of a follow through to the weak retail sales from what I see here. Cable is a little bit stronger. I'm a little bit pissed off because yesterday I said to the chat room, I set an order to go long both the cable and the Aussie quite early in the day, actually. And although we did retrace, later at night, European hours, for both of them, we retraced lower. Both of my orders were missed for a few pips. So, I wanted to be along both the Aussie and the cable, but unfortunately, I didn't go triggered in any of them. So I'm now seeing them move higher as more or less I was expecting, but I'm not riding any of them, which isn't so pleasant, but it is what it is. Now, other than that, let me also show that yesterday we had a very nice rejection once again from the 78.6. We said that this area is of significance. We got a nice rejection yesterday in the SPX. So far today, overnight, it's higher, but that doesn't say much because same thing applied yesterday at the same time of the day. So now it remains to be seen if we're going to go for the triangle scenario, the triangle interpretation, or something different here. Okay, so I think that this week is going to be quite critical for us to understand what exactly the stock markets want to do from from here. You can see the Dow as well. Dow already showing very good signs that this is a triangle actually. IWM quite stronger, but yesterday had a bearish engulfing before actually hitting the high. It almost hit the high. The Nasdaq, as we've said many times, is one index that definitely printed a new high, and it actually found a support at the previous high overnight. So it remains to be seen what it's going to be doing from here. What remains a fact, though, is that we do have clear Rsi divergence here, and the VIX is on, is resuming its effort to deflate. We've already gone near 15 from 50 plus. Anyhow, so let's have a look at the currency pairs, the popular ones, and then we can go over questions. Brad is asking, how do you get your boxes so perfectly aligned? TradingView has very nice drawing tools, so it helps. It's a very nice drawing package actually. It's a very nice charting package. I like it very much. I have completely stopped using anything else than TradingView, and we use it in general in ForexAnalytix, and we've been very happy with it. So Euro USD still, in my opinion, in a corrective pattern here, and shows quite a promise once it breaks to the upside from this trend line, because this looks to me like another bull flag. In a smaller extent, exactly what we saw here. Strong prolonged move higher, bull flag. Strong move higher. Okay, not that prolonged. Another bull flag, and it still looks good for a push to the upside. So nothing has changed here. Here I'm still looking higher. Cable already doing the move, so it's leading at the moment. Euro. I'm not seeing any spectacular momentum, I have to admit here. So I would also want to see like a higher high. So for example, I would want to see a move above this 140.70. But regardless, yesterday I was willing to buy it. Unfortunately, as I said, it never happened. It never got me triggered. But I was definitely willing to buy it, and I think that the chances for a move higher from here are quite increased in comparison to a rollover and move lower. Even if we move lower, though, as long as we remain within this corrective pattern, I will still remain bullish. 136 is quite an important support level if we move higher from lower from here. Now Aussie, Blake already showed this, is testing the 79 zone. Looks to me like it wants to actually break above it. If that happens, I would be expecting that we're going to at least test the 61.8% fib of the move lower, which is at 79.75 roughly. It's where more or less we found a high there as well. And unless we reverse intraday and we close lower, I think it looks good for that. Kiwi, on the other hand, more of a broad formation. We were talking about it yesterday as well. Higher potential of breaking to the upside, but we're definitely not there yet. I mean, there is a lot of room until we can actually retest the double top. So in the middle of nowhere, in my opinion, I wouldn't be trading it as it is. Now, having to do with the USD CAD, I'm going to be very brief about it because Blake already mentioned it. I said yesterday specifically that be careful because the 128 zone is an area of support. You can see it here. If I zoom out, you can see how important it has been, and it acted as such. So despite the break lower from this ascending channel, which we can even redraw because you always need to adapt if you see that a formation is not exactly what you had in mind. So if you redraw this like that, it's even a better channel. It channels better, I mean, than than it did before. You can see it here. So, you know, if you draw the channel like this, that it also passes from the start, it shows that we're still within this channel, and you know, 128 held. On the other hand, we are testing once again the 130 area as a resistance. So, you know, obviously, if you wanted to be long, 128 was the place to be yesterday. You know, with a decent reward to risk ratio, I wouldn't be doing it yesterday, and I didn't do it, of course. But on the other hand, I wouldn't be going long at 130. Having said that, I also need to notice that there is some Rsi divergence here. But my feeling tells me that, you know, USD CAD is not done to the upside. I would really want to see this confluence of resistances tested at 61.8. It's also the 100% extension of the first leg higher. So I don't know. I would really want to see like a move to 131, 130. And as I have said, you know, several days ago, I already have an order to be short the USD CAD there. Okay, half a position. So, you know, if it goes there, I'm going to be triggered. If not, I'm going to reassess. Perhaps I will short if we break below 128 again. I have to think about it. One thing is for sure, I have an order to go short at what I told you, and you know, I feel good about it. Now, USD NOK remains quite weak, and as I said, this is my preferred choice to be short the dollar in comparison to, you know, anything else or any other commodity currency, so that hasn't changed. And now let's go to the USD yen. As you see, the USD yen hasn't even managed to print a higher high in the short term. I mean, we were considering even the possibility of pushing the trend line, the huge trend line support as resistance this time and getting rejected from there, but USD yen seems unable to even do that. So, you know, I have to reiterate what I've said, you know, days ago. We're seeing a rebound from here. This rebound even has the potential of extending a little bit higher. But one thing is for sure, as long as this blue trend line holds as resistance, in no way I will be bullish the USD yen. Okay, especially the more days that pass and we don't seem to be gaining upside momentum, it looks to me like a textbook consolidation in which the market wants to work out the oversold conditions mostly through time and not price retracement. So, you know, for each day that passes and we don't do something significant to the upside, the higher the chances that, you know, USD yen is simply going to collapse through support and, you know, produce one more leg to the downside. Okay. So let's have a look at a few of the questions. Have your feelings changed about the current Kiwi government being a problem for Kiwi appreciation? Stelio, probably that's a question targeted at you, mate.
Yeah, personally, no. We haven't seen much from the current New Zealand government, to be honest. So I think what they've said so far makes me think that you know, they will be in favor of a weaker currency. But as I said before, they haven't done much yet, so we're still waiting. And my thoughts have not changed yet. No, I'm still bearish the Kiwi for the foreseeable future.
Okay. I have a question about palladium, and you know, if my thesis has changed with palladium in being short here. First of all, I have to remind you that I was a short palladium from 1,044. I took half of my profits at 1,000. I'm holding another half of position, looking lower. You're asking me now, since palladium seems to be breaking back above 1,000, which, you know, definitely is not an irrelevant technical event. But so far, I still see a strong move lower, and you know, as long as this 1,000, these lows here at 1,023 are holding, I'm going to be holding the other half of my position because I still think there's a decent chance of another push to the downside towards the 910 area. So no, my thesis hasn't really changed. I don't yet have any reason to do so, and I'm still holding half of my position. Okay. Now, let's have a brief look at the other two metals because we don't have much to say. Gold is still chopping around in this large triangle. As you can see, silver is doing the exact same thing. I mean, you know, it's dull and boring saying the same every day, but I know that those are popular metals and people are watching them, but unfortunately, they have been doing absolutely nothing recently. The metal that has been doing something during the past few days, which is unsurprising if you're listening into the face webinar, you know how this, what my opinion about it was, is copper, which is once again pushing to retest this trendline resistance. I remain of the opinion that copper should, technically speaking, break to the upside at some point because you know the move lower looks overlapping and corrective, and you know if we break above this trend line, I will really be looking for new highs. So you know my thesis remains as it is as well in copper, and I think it might even do the move like within the next few days. It seems to be gaining some nice momentum. We already had, I mean, if I count today's price action, we've already had 3 quite bullish days during the past 4 trading days. And especially this was a very nice signal. This was an outside white candle, and you know we've been pushing higher since. Okay, even if you go down to a 4-hour chart, not that I consider it that much relevant, but you can even see an inverted head and shoulders formation here. So you know that's an extra element. Not that I would need an inverted head and shoulders formation to save my bias, but you know you can even take that into account. Okay, let's see if we have Steve, the rand is hitting levels you talked about. How much further? Okay, let's have a look at it. Okay, this is what I think about the USD rand. Okay, I told you when we were breaking below here that, in my opinion, this is a very bearish move because, in essence, it solidifies the view that this was strong move lower, this was a correction to that move, and another leg to the downside has started. Now, I was seeing here the potential for a descending wedge, which would lead to a stronger corrective move before resuming lower. So you see what I had drawn here, that I would like to see a move towards the at least a 161.8 of the corrective move. And you know, it would be nice to see like a bigger rebound coming out of this descending wedge, which would give a very nice opportunity to be short. But in all honesty, as you see, we've had no momentum to the upside. So that might happen during the next few days, sure. But I have to tell you that you know the more the days pass, and we do not push higher. It's exactly what I said with USD yen, but you know it's even stronger here. The higher the chances that it's just going to resume its move to the downside without just producing any decent corrective move that you can actually feel comfortable shorting. As you see, the 50 daily moving average, which is the green line here, is capping price action for now. And you know, I would really like to see another move to the upside, at least as a first resistance area towards the 1222 area. But I don't know, might even not even happen. Definitely, regardless, I remain bearish. There is no question about it. The structure is extremely telling of how bearish it is. Any change in view on the Nifty? Let's have a look at it for you, mate. By the way, before we have a look at the Nifty, let's have a look at the DAX. because we've had questions about that. Let's have a look at the DAX. Let's have a look at the okay. So at a very significant confluence of supports, it due to this nice confluence of supports, I said it like after we tested this area, I said, it would have been the DAX. But, what remains to be the case as well, which I had mentioned, is for the DAX to prove that it's bullish, it at least needs to clear this trend line here, because this trend line acted as support 3 times while we were in this expanding triangle. It has acted as a resistance another couple of times. And, unless I see it being broken, at the very least, we are neutral, if not bearish, because, the prior strong move lower was bearish. So why not see another move to the downside, right? It's not out of the question. If you saw, the only thing I had drawn here is that perhaps we get another rejection from there. We got another rejection. We didn't actually even reach that area exactly, but we did get another rejection below that area. So, at the very least, we remain in no man's land, like trapped between this long-term ascending trend line and the expanding triangles trend line support that has been acting recently as resistance. Now, having to do with the FTSE, more or less an equivalent situation. I said that I would like to see a rejection from that area. The rejection came after actually falsely breaking a little bit above it, but we did not see a push to new lows. Regardless, I have to say that it doesn't look so good to me, because this looks like a triangle to me. If you look at it, okay, now that we've done this with the line, so this looks a little bit like a triangle to me. Actually, it looks quite a lot like a triangle to me. And if that is the case, right, we don't know if that was another point of the triangle, or we should have it ahead. But if that's the case, if this proves to be a triangle, then I would be expecting another push to the downside. Now let's have a look at the Nifty for our friend here. Yeah, Nifty has started getting, being a little bit choppy. We did satisfy, one more low. We did find, I remember that I said that the 200 EMA might provide some support. It has done so far. And now, the move lower has become a little bit more complex, because I would really have loved to see an equality towards there. I mean, an equality of legs, because this was like a very nice bear flag. But now we've broken back below it. So the technical structure has become, somewhat more complicated. Something, the retest of the 200 DMA might prove for the market to be enough, and we might move higher from here, but I'm not convinced yet, I have to tell you. I mean, I would definitely need to see a break above these highs to feel more comfortable that this might have been a low. Until then, I'm not convinced that we're done. I still believe that another push lower towards this area is a likely scenario. So it's, at the very best, it's a coin toss. Thoughts on pound CAD? Let's have a look at it. Here's the pound CAD. Yeah, first thought here on the pound CAD is that you should be very careful, because we're currently testing. I'll zoom out so you can see it. We are testing some important resistance. If I extend, you can see, this was a strong area of support 3 times in the past. So why not act as a resistance? So be a little bit careful in this level, in the sense that I wouldn't be buying up here in no way. Also, you can see that we've had some prolonged Rsi divergence. Although the pound CAD has not stopped pushing to the upside, RSI has been steadily diverging since the end of January. Okay, So that's another sign. But all these are warning signs. But what remains a fact is that we keep producing higher lows, which means that you should respect the upside. Just as I said, this is not the level to be buying, right? Because this is a very good level, a very nice level. If you remember, this is exactly what we drew here. I was viewing this as a triangle. So I was a quite strong believer that this is going to be resolved to the upside, and that's why I had drawn this. And this is exactly what happened. But, I think now it's a little bit overstretched. And, this is an area that might produce a move to the downside, which, if you're bullish, is a good thing because would be very lovely to see a push lower to retest this confluence of supports, this ascending trend line, this horizontal area. And then I think we will have a nice buying opportunity. So definitely not buy it here, at least in my point of view, but with a little bit of luck, this level can create a reaction, and that reaction might be an opportunity. That's what I see with the pound cat. Professor Stephen Hawking, good luck on your new voyage. Absolutely, Andy. One of the greatest personalities of our century, has definitely reshaped our view in the cosmos. A brilliant mind, for sure, a brilliant mind, and has expanded the human horizons by, significantly. In essence, Stephen Hawking took the work of Albert Einstein many steps further, right? Many steps further. Personally, I love science and astronomy and physics, etc. And I've been fascinated by his work, and I really think that his name is definitely gonna stay in the highlights of all times for mankind. So, okay, let's see if we have any more questions. You have a nice interview with Peter Bookvar today, Dale. That's correct, right? Dale?
Yeah, you want him walking away, yes. Peter's not in the room yet, but I expect him.
Okay. Let me remind you.
Go ahead.
Let me remind you once again, you have absolutely nothing to lose to participate here in the. You have actually quite a lot of things to gain. Let me put the link again in the chat. In participating in the competition, which is over in 15 hours from now, you can win subscriptions to ForexAnalytix. You can also win nice T-shirts, mugs, mouse pads, and it's a free competition, so why not? So let me see if I have anything else to speak about. Oh yeah, there is one currency pair I wanted to talk about, and this is the USD with the Turkish lira. I remember that we had a look at it last week when I said that, listen, this is technically very nice. It's behaving very well. Just look at it. It produced a wedge. It broke above it. It came and retested it multiple times as support. It worked very nicely. It moved higher, very in a very technical manner. Once again, within a channel, corrected within a channel, and then produced a range. And what is it doing now? It's breaking above this range. So we said that we had three scenarios: one resuming a little bit, being choppy, the other one breaking lower, with the other one breaking higher. Of course, somebody can say this covers all the possibilities. Yeah, but the thing is that when something is so technical, no matter of which choices it decide to take, you'd rather respect it. And in this case, what this pair has done is break to the upside. So I think you should respect this and watch from this point on this broken ranges resistance and support. Because if you want to be long, a retest of that area is probably a good opportunity.
Okay, Steve, Peter has some time constraints. He's in the house, so I'd like to.
Okay, then you can go ahead and start.
Euro failed at resistance phase. Okay. Thank you, Steve. Thank you, Stel.
Thank you, Dale. I enjoyed the interview with Peter.
Okay, stay tuned for Peter Bookvar. Hi, Peter, I see you in the room. I'm going to make you the presenter. I know there's some time constraints, so we'll get right at it. You know what? I'm going to make you, I'm going to make myself the presenter. Make myself the presenter.
Hi.
You're the panelist. Hi, Peter. How are you?
How you doing?
Good. All right. So I know you have some time constraints. I want to get right to it. During our discussions in the past, you always felt that Europe was going to be the epicenter of the next recession or crisis. And I went to your site, and you're using the metaphor of a song, I believe, for Draghi. Video killed the radio star. Is Draghi the radio star?
No, actually, it was. If you go further down in my note, it was yesterday. It was actually referring to Japan, where not one 10-year JGB bond traded the entire day. So I basically said the Bank of Japan has killed the Japanese bond market.
Repercussions?
Now you can also say that Draghi has killed the European bond market as well. And central banks have, generally speaking, killed the free market, if you want to take it another step further.
Okay. All right. So Draghi, we had the ECB last week. I know you've been bullish euro, bearish dollar, and Draghi tried to talk it down. It's under a little pressure right now. Do you think that Draghi's what you were looking for when we talked months earlier, that Draghi's on course for your expectations?
Yeah, he's on course for his extraordinarily dovish way of exiting their accommodation. So yes, he's on course for that. Yes, the euro continues to trade well, but at the same time, the dollar continues to trade poorly against many other currencies. I mean, just look at Friday's action in the dollar. I mean, if you had to script a perfect setup for a rally in the dollar, strong payroll number, higher interest rates, the possibility of a fourth hike this year instead of 3, and the dollar could not get out of its own way. So yes, it's euro strength, but it's also dollar weakness persistently against a lot of currencies.
Okay, so I want to ask you this, even though I know you're not going to agree with it. You know, I do a lot of intelligence gathering, Peter, and I know a lot of very sharp market tacticians that are looking for euro 126, 127, and then they think there's going to be a big correction that could take it all the way back down towards 116. What fundamentally could drive the euro lower to those levels and possibly peak up here? Could it be trade war ramifications?
It's a good question. I mean, let's before I answer what would weaken it, I think a main factor in what has strengthened it is the European recovery, the trade surplus, with the contrary trade deficit the U.S. has. I think if the U.S. can shrink their trade deficit, well, that may help dollar flows. If the European bond market blows up because Draghi post accommodation, well, that potentially could weaken the euro. But on the other hand, maybe high rates helps the euro. So I think, well, I'll say this: it's maybe potentially the Fed that starts to get ahead of the curve in terms of policy, rather than this dovish gradual pace of rate hikes. Maybe that's what is needed to weaken the euro.
Okay, yeah, I knew you'd come up with a fundamental reason. And why don't we talk a little bit about Powell? I've read some of his language. Doesn't sound like he would mind if there was a 20% correction in equities. I think a lot of people still believe there's a Fed put out there. What do you think about Powell and his philosophy about risk assets?
Well, there's no question that there's a Fed put out there. It's just a question of where is the strike price. The reason why there's a Fed put is because of the Greenspan, Bernanke, Yellen model of having creating this asset price dependent economy. So if asset prices fall, that threatens growth. Therefore, there is a Fed put of some sort. Now, with Powell, I think that strike price is much further out of the money than it was with Bernanke and Yellen. And whether it's 20% or 30%, we'll have to see. But there's, in this new world post-Greenspan of monetary policy, there's always a Fed put. Just a matter of where it's placed.
Do you think they came in at the 200-day moving average that we had in February where it tagged it twice and recovered?
No, I don't think they're that smart.
Okay. Maybe it was Carl Icahn, like after the Trump election. So let me ask you
a lot of machines. A lot of machines are staring at the same lines that we all do. Everyone's looking at these moving averages, and a lot of it's trading off. And going back the last couple of years, it's paid to buy that 200-day moving average. It's the question is what happens when you start to test it a second or a third time. That's the test, not necessarily the first time.
Okay, so we've made new highs in NASDAQ, Peter, but the other averages haven't followed suit. I'm thinking that you believe that we will retest those lows and take them out. The question is, though, can the S&Ps make new highs before that happens, or are we still in a correction from those lows? What's your take?
Well, we've seen the NASDAQ certainly recover, but half of the NASDAQ 100 rally has been 5 stocks.
Yeah.
And all the all the big cap tech. If you look at, broadly speaking, the number of New York Stock Exchange stocks trading above their 200-day moving average, we've only got basically about half back of what we lost. So, there's a different complexion to this market post-January when rates have now risen above to multi-year highs. It's clear that any tape watcher can see that there's a change in tone here. And it's not just the rise in rates, but behind the scenes, the Fed balance sheet is getting smaller. And in 2 weeks, they're going to go from a pace of $20 billion a month to $30 billion a month, from $60 billion a quarter to $90 billion a quarter. It was only $30 billion a quarter in Q4. And, I'm of the belief, just as quantitative easing created a lot of excitement and enthusiasm, nebulence for risk assets, I'm also of the belief that quantitative tightening will do the opposite. Now, whether it is immediately symmetrical, it is not, because the pace of quantitative tightening is only increasing over time. But to think that there's a free lunch here, I think is somewhat delusional in terms of the impact of not just the rate hikes, but a smaller Fed balance sheet and therefore a reduction of liquidity. Then as the months go on, you get closer to the end of QE in Europe, as they will likely end it by year end, but dramatically taper again come October 1st. So there is this liquidity flow that is turning into a drip. And when it comes to multiples and what you want to pay for a stock, that is a big deal. So you can do all the economic analysis as you want. You can run all the earnings per share estimates you want. The liquidity and the interest rate environment is changing, and people have to be cognizant of that.
Were you surprised that the VIX retraced all the way back from 50? It looks like we have a different volatility regime. I don't think we're going to see the 10s anymore, or the 11s.
I think we may not see a 9 handle for
until
next cycle.
Yeah,
whenever that might be.
Okay. All right. And do you think that what happened, that there's still some damage out there in the markets from people that have been picking up pennies off the sidewalk before the steamroller came, that were shorting or had writing strategies on selling volatility, or do you think that's all been cleaned up?
I'm sure that the trade will, just as anybody will short anything, just as they buy anything, there'll always be someone who's going to be short the VIX or short volatility. I think it just got to a level of extremity that obviously had the sharp snapback. I think what was most interesting about what happened is it was only a very modest increase in interest rates that blew up an entire trade. I mean, the 10-year yield went from 240 to 270, and you had this massive trade unwind. And I think that should be a message to everybody of how sensitive markets and the economy are to modest changes in interest rates. And people can say, oh, well, yeah, interest rates are up, but they're still very low. But look what a 30 basis point move in the 10-year did to a potentially a $1 trillion plus trade. It evaporated it in 2 days. So
Okay.
I think that should have been sort of a canary in the sense of people should be reevaluating their risk profile and not assume that the next 2 years are going to be the same as the last 2 years.
Okay, and I have the yield chart up there, Peter, and it looks like we're getting not much relief, and maybe we could even see 275 on the 10-year, but the trend looks like it's gaining momentum and force. And where do you think the next tripwire would be? Around 3.25, where the market would wake up and pay attention, or all we need to do is rally to new highs in yields, and that's going to pressure the market? And
no,
what
it's going to be 3.
For? What are you looking?
Well, it's going to be 3. It's going to be 3%, not because 3% is a round number, but because we got to 303 on December 31st, 2013. We got to 3% in September 2013, and we weren't at 3% before then until 2011. So just because we got there twice in 2013 on the taper tantrum and then fell back, that's the next real level of importance. Again, not because it's a round number, but because they tried to get above that twice in 2013 in the middle of the year, the end of that year, and then failed. You get above that, then you're talking 7-year highs in 10-year bond yields. You're already at 9.5-year highs in 2-year yields. So we can look at the 10-year, but the short end certainly has adjusted mightily as well.
So we had a little brief period of yields beginning to, the yield curve was changing from flattening to going the other way. Seems to be flattening again. Do you have a view on what the curve is going to do in here?
Certainly the trend has been narrower. I think a lot of that will have to depend on the Fed. If the Fed still stays with this very gradual pace and they still stay at 3, even if inflation numbers start to tick higher, which I expect them to do, then I'll actually expect some steepening because I'll think that the long end will tighten for them. If for whatever reason Powell says, you know what, 3 is way too gradual, let's do 4, and even 4 is gradual considering that Greenspan was doing it 8 times a year in the mid-2000s, well then maybe the curve can flatten again. So I think it's really a question of whether Powell is going to be Yellen 2.0, or he'll try to get ahead of the curve to try to contain the rise in long-term interest rates by raising a 4th time this year.
Well, lawyers don't do anything without a retainer, so maybe you'll want put a few hikes in the bank. I wanted to turn to gold. I know you're a proponent of it as being at least part of people's portfolio. I was taught that shares should lead the way of the underlying commodity. And, gold looks great, Peter, but when I look at some type of gold shares, they're underperforming fairly dramatically, except for the silver shares. And I'm wondering if there's some type of market tell. So here's, Coeur d'Alene and here's Hecla. But then if you go and you take a look at some of the gold shares like Imana, they look ugly compared to the gold. So is there the reason for that just being the debt that the miners have on the books, or is this a market tell to be patient about buying gold until the shares look better? What do you think?
I think it's going to be the price of gold and silver that's going to lead the way. I mean, XAU, the gold and silver index, I mean, it's back to where it was in 2003 when the gold price of gold was dramatically lower. So the bear market has been so vicious in this sector that I don't see it getting reignited until the price of gold and silver maintains current levels and then goes higher. I mean, there's no question that even at current levels, I expect miner earnings to improve dramatically over the next couple of quarters. Gold prices are up 30% over the past couple of years. So earnings from a fundamental standpoint are getting better for this group. I just don't think from a psychological standpoint, people are really believers And I think it's going to need to be a further rise in the metals prices, with gold maybe above 1350, convincingly, it's approaching 1400, and silver, needs to get out of its own way. I think that needs to drive the way. Now, listen, it would be encouraging if the miners start to dig in and people start to appreciate the earnings power that they have, even at current prices. But I just think people have just gotten so beat up that they rather see a convincing rise in the metals before they buy the stocks.
All right. Well, I have to ask you, do you think it's also a possibility of people looking at cryptos as an alternative source for their safe haven money, even though it's not a safe haven at all? And what's your view on cryptos in here?
I'm sure that has a factor in it, but gold's a global currency, and if you're in Germany and you're in China and you are in Japan and you see what your central banks are doing, you're certainly more inclined to be buying gold than Bitcoin. Now, granted, Bitcoin in Japan is big, so I'm not taking away from that. I'm sure there's an influence, but I think the bull case in gold and silver may be only temporarily altered by people's views to cryptos than anything else. I am all for the concept of what spawned these cryptos, and particularly Bitcoin, and that let's have a finite currency limited in supply that's not dictated by central banks, and maybe even make it a form of exchange and payment. But the price of Bitcoin, and the price of all these other cryptos, I have no idea where they should be. So I understand the technology. I appreciate it. I appreciate the concept. And maybe we will have some form of electronic payments that are coin driven. But whether Bitcoin is 8,600 or 50,000 or $5, I think it can go to any of those prices and no one would be surprised.
Yeah, right. How can you use it as a medium of exchange if you're in the grocery store and your Bitcoin is worth 20%, 30% less in an hour, and you go to pay for your groceries?
You can imagine the races around that supermarket. It's everyone's cart, rushing to the cashier.
So, Peter, I just want to wrap it with perhaps I could show your website, and people should follow you. And I also saw one thing on King World. You get published there quite a bit. It seems like you're looking for the recession to begin in full swing 2019, that this is kind of a transition year to get from growth, even though we're getting better GDP numbers, to a recession. Is 2019 when you think a lot of the things you've been telling people for a few years begin to manifest in full force?
Well, rather than putting a year on it, I want people to understand what will drive the next recession. There's this belief that the economy turns down and then that leads to a bear market in stocks. But the last two recessions were driven by declines in asset prices. Exactly. Technology stocks fell, it led to a collapse in capital spending. Obviously, house prices fell, led to a collapse in bank balance sheets. It will be another decline in asset prices that leads to the next recession. This decline of asset prices, I believe, will be driven by higher interest rates, monetary tightening that leads to a fall in the equity market, and then that leads to the next recession. So when that happens, I don't know. I think the pieces are in place, again, because monetary tightening is intensifying as the year progresses, and that markets are clearly already reacting. I mean, we saw the first 10% correction in years because of a rise in interest rates. So just determining the question of recession, focus on asset prices, focus on interest rates, because that will drive the next recession. So,
so it's a bond market that's going to wag the dog, higher yield.
Yes,
so the asset class that most likely is the first to cave and cause problems can be things like high yield debt, things like that.
Right.
Spreads increasing, so those are the signs, correct?
Correct. And keep your eye on 3-month LIBOR, which is now essentially doubled over the past year.
Yeah, so that doesn't make it any easier to trim our budget deficit. Any comment, or you just want to avoid what's happening politically, and then I'll let you go?
Well, the higher interest expense is going to be a main driver of the U.S. government finances. I mean, budget deficits are approaching $1 trillion.
Right.
And in bond bull markets, that doesn't really matter. But if you believe, as I do, that we're no longer in a bond bull market, and that ended in the summer of 2016 after Brexit, well, the bond market's becoming more sensitive to major increase in supply. I mean, the 2-year note yield today is hitting a fresh 9.5-year high at 2.29%. Granted, that comes after the hotter than expected PPI and around 2% CPI that we saw yesterday, but also a lot of it is the enormous amount of supply that the market has to absorb in the short end because of these exploding debts and deficits. So now, all of a sudden, I believe they do matter. And again, that will eventually lead to a crimp in activity. The U.S. economy, U.S. markets have been addicted to near zero interest rates and all this quantitative easing, and they're going to be very sensitive, as I said earlier, to changes in interest rates that are moving higher.
Thank you so much, Peter. I'm showing your website. The best way to follow Peter is to subscribe to his insightful analysis. I know that every time I talk to him, he reinforces some of the views I have and also gives me pause, which probably saves me money from making mistakes. So, Peter, thank you again for joining us. Good hunting in the next few months, and we'll get back together in the summer and see where
Thanks, Dan. I just want to yeah, and just alert your listeners also that I have a new position. I'm no longer with Larry Lindsay, the Chief Investment Officer for Bleakley Advisory Group, which is a money management firm. So a lot of the things that I talk about, my money is where my mouth is. Okay, so you're now an RIA? Yes. Okay. All right, so minimum accounts that you'll take, Peter? It's open to negotiation. So anybody's interested, they can always check out the website and Google me, and we can always chat. Okay, Peter. Thanks, Dale. Peter, there you go. So besides subscribing, if you want a conservative guy who's aware that shoes can drop and there is a thing called gravity, you could have your money managed with Peter. Thanks for your time again, my trading warrior brother. Thanks, Dale. Be good. Okay, bye-bye. Everyone, that's Peter Bookbar. And I'd like to thank everyone for their attention today. Good hunting the rest of the day. Tomorrow's a terrific Thursday. I'll see everyone then. Remember, don't just count your pips, count your blessings. Good hunting the rest of the day. Don't forget to vote and pretend you're Nostradamus for a few minutes on your forecast for where the euro's going to be. I forgot the other pair. Peter's Twitter is @P, the initial P, Bookvar, BOOCKVAR. Okay, guys, see you tomorrow. You're very welcome. Adios. Thanks again, Peter.